Welcome to the Daily Brief, where I'll go over the highlights in the market for Wednesday, September 28th, and then I'll also go over the highlights and the bullet points for Thursday, September 29th. And we had a pretty good day. It was a nice, solid up day, but was this a dead cat bounce, or was this the start of putting in a bottom and actually getting ready to go higher? We don't really know that right now. But we finally saw some relief, especially in the short term, where some of our indicators are looking a little better. Also, I just want to send out a heartfelt thought and prayer for those of you that are in Florida that may be dealing with the hurricane situation. I lived in Florida for a period of time. I have friends and family that live in that area. So let's just hope for the best in that whole situation. We also have another geopolitical event to add to our list, and that is the Nord Stream pipelines that have exploded. And it's looking like it was sabotage. But we don't really know who's behind the whole thing right now. Was it Russia? Was it the US? Was it one of the EU countries? Was it a private organization? We don't really know at this point. So it's all speculation, and we don't really know what the fallout will be from that whole situation either. So let's go back and talk about what happened. At the open, we had a flat to higher open, and prices actually went above the daily pivot to 36.63. That was positive step number one. As the day went on, we got all the way up to R2 at 37.02. So we got back above the 3,700 level. And then buying just kept going after that. So we shot above R1. Never made it to R2, but we were able to stay above R1 into the close. Buying continued into the close. But then the last 10 minutes, we saw some selling, and that took prices down slightly. Had that not happened, we would have closed pretty much at the highs. So, and up over 2%, where we closed just under 2%. We ended up being up 1.97% overall with above average volume. The technicals are still negative overall. We're just at worst or best, I'm not sure how you would view this, we're working off a deeply oversold condition. Is this going to be a bottom? Are we going to see some real improvements from here? We just have to watch it day by day and see how things play out. Inflation and interest rates, that's the real fixation of the stock market, both domestically inside the US and then in a foreign situation as well, specifically with Great Britain. We also have geopolitical concerns, the whole pipeline situation and how that could play out, and then any more Fed speak that we may get. So, what can we say about what happened on Wednesday? Was this a bounce or a bottom? People are going to have their own opinions. My personal recommendation would be yes. Look at both of these. We first have to treat this as a bounce because we were oversold. And if we see some improvement in the charts now, we could maybe drift over into the bottom scenario. Be careful of getting really dogmatic with this, because the market can do whatever it wants. And just because we come up with a certain conclusion doesn't necessarily mean that's what's going to happen. We have to be open to whatever will happen at any given time. That's just my approach to things. Now, if you like to form a really solid scenario and then go with it, all right. If that works for you, by all means, go with that. The Bank of England, they announced a bond purchase, which is kind of I said in the full length video, this is QE on the left-hand side of the road. They're going to start purchasing bonds between September 28th and October 14th. They're trying to get some handle on what's going on economically in Britain right now. Stocks are still being pretty influenced by currency movements, specifically the British pound, even though it did recover in Wednesday's session and the dollar came down. We do have the pipeline explosions that have just developed within the last 24 hours, and we'll have to see how all that plays out. The 30 to the 5, the 10 to the 2, and the 10 to the 5, those yield curves remain inverted. Sentiment, it ticked up slightly, but we're still over in the extreme fear camp. Currently, we had the weekly MBA mortgage applications index. It came out and it was down 3.7%. And then we had the advanced report of international trade in goods. It showed a deficit of 87.3 billion, where last time we were at 90.2. So it was a little bit lower of a deficit. And then the advanced report for retail inventories, it rose because things are sitting on the shelves instead of going out and being sold to people. So the inventories rose 1.4% versus 1.1% that we saw last time. As far as the wholesale inventories, they were also up even more at 1.3%, where last time they were up 0.6%. Pending home sales were down 2%. They expected them to be down 0.5%. So this was weaker than expected. Our trend is still negative because we have the red line on top. The ADX is above 20 and it's above the moving average. I switched our bias over to a tentative positive because of the up day. That could change quickly because we don't really know. Is this going to be the beginning of something or just a little pause before we resume the downtrend? I have kept our momentum as negative for right now because one day doesn't really change what's happened over the last 2, 3, 4, 5 days. So what's our outlook? The technicals are negative and bouncing from being oversold. So we have to ask, can this continue? We have jobless claims coming out, the third estimate for second quarter GDP. We've got the whole list of geopolitical events, and I've added the Nord Stream pipeline explosion to this list just to see, can we figure out who did it, why they did it, and what are the ramifications going to be. Our scenarios, it's still kind of hard to go with the down scenario right now because we are bouncing. So was this a DCB or dead cat bounce, or have we set some kind of a bottom here? If we have more room to run to the upside, going short could be kind of dangerous right now, but we can't really go up yet because our technicals are negative and we need to see more confirmation. Are we going to get some legs out of this bounce? We can't really go sideways right now unless you set credit spreads well above and below where we're at currently. And the way I do it is I go, if we're in a downtrend, then I do credit spreads above current prices. If we're in an uptrend, then I set credit spreads up below current trends. That is something that can be implemented. But if you're a trend-based trader, it's really hard because the ADX is still above 20. It's negative. It's still a trend, but we're getting a lot of confliction now between scenarios 1 and 2. So our conclusion, we're still negative overall. We're bouncing from being short-term oversold. We're still pretty much oversold intermediate term, and long-term, we're still showing some oversold indications. So thank you. Have a wonderful day. Please feel free to check out the full-length video, and I will look to talk to you after Thursday's session.